Hi, Tim Bigham for Delta Derivatives, Option Hedges and Edges, and powered by the best option scanning tools on the market today, rbtrader.com, and taking a look at a market that is not being powered by much of anything lately. Certainly the news out of Apple with some revenue weakness, some really bad guidance to stock, weighing heavily on the market here, down about 5 points last I looked. And I think going forward, we have the Fed coming out this afternoon. That will be the big news. But going forward, I think instead of buying the dips, it's selling the rips from now on. So with the VIX somewhere, in that kind of low 20 area, not a bad time to be positioning with out of the money call spreads, just as kind of a strategy moving forward. And then taking a look at some of the scanners that popped up, we're looking at WBA, Walgreens Boots, is stock on the low of the year, but attracting some big time call buying. So we're positioning out in time, buying a simple call calendar. It's a big volume on the February 82.5 calls. We're sellers of those. We're buying the March 82.5 calls, getting into that, have a nice term structure volatility, leaning bullishly with that order flow. Really looking for Walgreens Boots to kind of move back up a little here towards that 200-day moving average. Stock is down very sharply after having a very good, run last year. Also taking a look at Solar City, another name that, little throat problem here. Solar City, a stock that had a big lift at the end of last year, shot all the way up to the 62 level on the Paris Accords with kind of the green initiative, but really has collapsed, almost got cut in half, is finally finding its footing around that $30 level. So we're positioning by selling out of the money put spreads on Solar City, using that $30 strike to sell, buying the 28 puts, going out in time using a strip sort of strategy. So only having a couple of these put spreads on, but taking advantage of some comparatively high implied volatility and the fact that this is a washed out name. Also looking at Freeport-McMoRan, which is showing finally a little sign of life here. We're seeing some, big volume on the put and call side here. So kind of a tug of war down around that 450 level. We'll see, but certainly with the stock here, I like that implied volatility is way up. So we're simply doing a simple covered call strategy on Freeport-McMoRan, buying the shares, selling the $5 strike January of next year, and really have about a 21% standstill return on that, and the net on this is less than $4. So until next time, this is Tim Bigham, and especially in this market environment, keep those stops in place and position sizes proper. Take care.